Hi, everybody. It's Heather, the expat entrepreneur. Welcome. This is episode number 18 of the Legit eBiz show. And what I want to talk to you about today is crypto, crypto for beginners. And in this particular episode, I want to specifically just talk about what is crypto and what is blockchain, and try and help to get a good fundamental understanding of it, because there's still a lot of confusion out there around it. So with cryptocurrencies, basically what they are is digital online money, coins that have been created. They cannot be held or taken out in your wallet or crumpled up and put in your pocket. They only exist in the network digitally. A lot of us tend to think of that in terms of online, and to me, when I think of online, it's always my computer. But online can also mean your phone. You can also utilize digital currency through the wallet in your phone, and so it doesn't necessarily mean that you have to be sitting behind your keyboard. But with digital currency, the secondary component of it is the blockchain, and these two things together make such a beautiful, transparent, wonderful system for us, which is why I believe they're going to be around for ever, for the long term. Blockchain is basically, if you think of that as the register, it is where every single transaction that has to do with cryptocurrency is recorded, whether an entire coin is bought and sold or a portion of it. And this is why it is so transparent, because everything is available in public record, and it exists in the network in all places at all times. And that's why it can't be fudged or altered or manipulated like our traditional system can. So one of the things that really struck me in the beginning when I first started to learn about it, and I'll admit fully that I have only begun my journey into understanding and investing in crypto very, very recently, within the last 2 months. And I just thought to myself, you know what, there have got to be a lot of other people out there who are in the same boat as me and don't know what the heck they're talking about when it comes to crypto, or what it's all about. And in the same exact way that I did this with online business and demystified which businesses are legit, which ones aren't, put that information in front of you all so that you could make informed decisions, I want to do the same thing for you as far as crypto goes. So I decided that I'm going to completely document my entire journey with it. And that starts here at ground zero with the understanding and fundamentals of what crypto is, what digital currencies are, what blockchain is, and what it's all about. So that's what this first episode is all about. And in the ones to come that will follow, I'm going to take you by the hand and show you exactly what I'm doing to invest in it, because I am going to invest in it. And I'll talk about that in another episode, not this one. But I want to just make it available for everybody to see so that you can learn from my journey and see if it's something that's right for you to do as well. So one of the first things that struck me when I first started learning about crypto and blockchain is that when they said it's decentralized, and I was like, whoa, that sounds bad. Like, I don't even know what that meant. You know what I mean? But it's actually a really good thing. As a matter of fact, it was completely had it the wrong way. When we talk about a centralized system, like our existing financial markets, for example, what that means is that they are owned, they are governed and regulated, and can be manipulated as well. With something like this that's decentralized, it means that it's not actually owned or controlled by anybody. And what's good about that is that it can't be manipulated. When we look at the state of things worldwide, as far as fiat currency goes, and fiat currency, what is that? That is the dollar bills and the coins that we put in our wallets and walk around and pay for things or services that we want to, and products that we want to buy and have services for ourselves with. Fiat currency is continually being devalued. And the reason for that is because I'll just take you back in time a little bit here and try and lay the groundwork. Up until 1971, the US dollar was backed by gold, and literally Fort Knox had enough gold in there to back all the US dollars that were in circulation. Like, can you imagine? That was literally the situation. In 71, that's when Nixon and his band of merry men decided, you know what, we need to take the lid off of this thing so that we can scale as a government. And that's when they decided to depeg the US dollar from gold. So that meant there was less gold in Fort Knox backing the dollar than there were dollars in circulation. And that disparity has grown to such a massive level now. I mean, we're all constantly hearing about the deficit level, and what you can see it yourself, right? When you take the money out of your pocket and how much that can buy you today compared to how much it used to buy you even a year ago. Even it's a much bigger amount when you look at it, you know, a number of years ago, but we can all see it firsthand as well, especially after one of these financial meltdowns that we have. And one of the biggest recent one, like 2006, was wow. I mean, actually, I think that the ramifications actually were fully seen in 2008, because that was the housing crisis and the mortgage crisis, they called it. And what ends up happening is, with every financial meltdown, the government decides on your behalf which companies they're going to save with their bailouts, right? And you get the pleasure of paying that, footing that bill by increased taxes down the road. They make those calls behind closed doors, and it's not something that we can participate in, right? And what in the end, what winds up happening is our taxes go up, our fees go up. We're levied with more fees for just, you know, living and consuming and the things that we normally do. And like I said, the amount of money that you have in your wallet to pay for your groceries is a great example. It gets you less and less every time. And I notice it hugely because I'm an expat. So I'll go into a grocery store in different countries with the same basic amount of money, call it $100, right? And what you can come out with in that grocery bag is just unbelievable compared to what it used to be. And I'm not even talking that long ago. And it's worse and worse and worse. Every time I go back home to Canada, or we travel abroad and we go somewhere on holidays or something, it's really, really clear for me to see, because it's the same scenario in all these other countries too. So it's important to realize that the fiat currency that we have in our pockets and in our bank accounts is devaluing every single day. It's meaning it's worth less and less actual value. I want to say worth less money, but what does money mean, right? The amount of that fiat currency you've got has less value every day. And that's because the market is centralized. That's because the financial markets in the first world nations, well, all nations, I suspect, are owned and governed and monopolized by the powers that be. And in these cases, it's the government. And then it's beneath that, it's the financial institutions that have negotiated the rights to be the ones who are going to be able to deliver these financial products to us. And I mean, this is a really interesting thing when you pull the layers back and you start digging deeper, because taking the financial markets as an example of why centralized and regulation can be so dangerous, even though we think it's the good thing and it's what we want. And dangerous is probably the wrong word to use, but just roll with me. With financial instruments, right? Those are investments. That's what they call them. Those are financial instruments, things like bonds or stocks or mutual funds or REITs or things like that. All these different types of instruments that are created by Wall Street, by those financial wizards, right? They are not available to everybody. And you may have noticed that over the years. You may have realized that, wow, somebody was talking about this kind of an investment, one does CDC or something, and no, I've never heard about that. And I asked this financial guy and they said, no, I can't get any of that. You don't qualify or whatever, something like that. Or maybe you've never even realized that there's this whole other level of financial instruments that you just simply do not have access to. And that is because you need to be an accredited investor in order to qualify to invest in the upper echelons of the investment instruments that they've created. And these are the ones that have the best potential return on investment, the lowest taxes, the least risk. Like they're the cream of the crop, and we don't get access to them because either your net worth isn't high enough, you don't have enough disposable income, you don't have enough liquid cash available on hand. Like, these are some of the questions, the criteria that you would be asked if you were filling out one of the forms, one of the, it's not a form, and maybe it's an application in order to see if you can qualify to get in on this secret investment. And that's what it boils down to, is how much money you've got. If you've got enough, and we're talking, I should have looked it up before I started this this episode, but in fact, I think I will go ahead and do that. I'll just pause. Okay, well, this was super easy. Just boom. Thank you, Mr. Google. Yeah, I'm just reading off the other computer here. In the United States, to be considered an accredited investor, one must have a net worth of at least $1 million, excluding the value of your primary residence, and you must have at least 200 grand a year for the last 2 years, or 300 if you've got a combined marital income. So there's a good level right there to give you an idea of the vast majority of the population who simply would not qualify. And this level was put in place to keep us apart as a differentiator. And it's simply so that the wealthy can continue to have these advantages, this edge, these benefits that most people don't have. And a lot of times we see that in regarding taxes, right? And you hear, oh, these big businessmen or these fat cats aren't paying taxes and everything else. And, you know, I'm really sorry to tell you, but a lot of times it's totally legal. It's totally legal. There are many ways to not pay taxes when you are in business, or when you are structured in a certain way, that are set up exactly that way on purpose, so that the people who either seek out the advice or find out by whatever means, or you've earned enough money and now you're dealing with a higher level financial advisor or accountant or something like that, who's going to advise you and show you and tell you which maybe you'd call it a loophole. It's not an illegal thing. It's totally above board. And these things exist in the system on purpose. So it's not always fair to point your finger and to accuse somebody, especially when they're being brought out in the media under, you know, a bad context that we don't have the backstory on, and they're just getting a, you know, it's not always the case, I admit. And I don't want to go down that path and be all controversial here, but I want you to know there are completely legal ways, many of them, that you and I can reduce our taxes to right now, if you want to take the time or pay an advisor to find out what those methods might be. And there are several that you can use as an employee, as somebody who can maybe work out of their home. There's multiple things, the possibilities. And I should also start out by saying, I am not a financial advisor. I am not a tax accountant or an accountant or anybody in the financial industry that is licensed or certified to give investment advice or financial or tax advice. I'm just trying to give you the little bit of information that I have about this, that I'm aware of for me and my situation, which is extremely confusing and complicated, being an expat and living in a different country than I'm a citizen of, residing in a different place. So whatever you do or don't do, I mean, you need to make sure that you get the qualified advice from a licensed professional in the jurisdiction that you live in, who knows about the situation, the tax situation where you live, because that's where we pay taxes, where we live for the most part. There's some exceptions, and especially if you're American, you're going to pay no matter where you are, a certain level anyway. But anyway, that's the bottom line with what any kind of investing that you do want to do. Make sure that you are getting proper advice and guidance from professionals, not just people on the internet, no matter who they might be. Okay, so and yeah, this is not meant to be advice or guide you or direct you in a certain way, but I will say that with the investments that are out there today, and the fact that we are generally not able to be considered, for the most of us, accredited investors, it means that the majority of the really good ones are taken off the table for you. And what does that mean? That means that you are only going to be allowed to invest in the things that your broker or financial planner or the person at the bank offers you up. And usually those are GICs, bonds, stocks, mutual funds, maybe a REIT, some, you know, annuity, like those kind of very, very basic financial instruments that exist. And as a result, like, where do those sit today? I mean, if you've got money in the bank, you're almost paying them to keep your money there. it's a huge liability for the bank at this day and age. You're not getting any interest. It's certainly any little incremental increase you might get over the course of an entire year once is going to be a drop in the bucket compared to how much buying power you've lost with that currency, right? Because it's all devaluing, it's all going down in value. So the reason I'm talking about all of this is just to give you a little bit more of a basis for considering more with an open mind crypto and what it's all about, because crypto is kind of it almost has a little bit of a bad connotation in a way. And it kind of has this bad connotation, right? And it's no wonder, because the people like in the markets and banking and governments, that's exactly what they want you to have, is this doubt and this looming, suspicion about it, and questions and all that, because they want to keep you where they have their vested interest. And I mean, that's really true. So like one thing that always sticks with me is this amazing, great quote that Warren Buffett said once. And he said, you don't go to a barber and ask him if you need a haircut, because the answer is going to be yes, no matter what, right? That's where he's making money. Of course you need a haircut. So, consider the source when you're looking and you're hearing more and more about crypto, because it's not going away. And you're going to be hearing lots more in the months and years to come, because what is the vested interest of the person that you're listening to talk about it? What is their vested interest in their opinion about it? If it's a broker or an investment person, a financial planner, it's like, I had somebody say this to me recently, because I was promoting actually a crypto course not too long ago, and you'll see it again in the future at some point, believe me. But she was saying to me, well, I'm just about to go and see my financial planner. I've got an appointment with them and I haven't seen them in a couple of years, and it's time to catch up and all that. And I said, that's great. Be prepared, because chances are they're not going to have much good to say about crypto. And generally speaking, they won't endorse other people's products either, because they're commission salespeople. And I know, because I was one. I was a financial planner back in the day in Canada. And I'll tell you what, you have the heavy pressure, what they want you to push. And if you think that your financial planner is 100% always only looking out for what's best for you, I got a bridge I can sell you to, and wherever, Timbuktu. It's like everybody, especially when you're dealing with commission salespeople, they are going to be maybe your interests are going to align with theirs. Maybe it does from time to time, but I'll tell you what, if there was a better mutual fund that doesn't fall under their umbrella, they're not going to be recommending you go across the street to somebody else's portfolio. They're going to find the next best thing that they have and offer you that instead. So, and that's normal and that's fine. And I don't begrudge them, because that's business and it's buyer beware after all, isn't it? For all of us. Chances are my mutual fund is not going to be much different than theirs when we're both big banks, and we probably nearly hold the same companies in our funds anyway. It really comes down to the fees, which is where they really get you, by the way, on those mutual funds. Wow, go with the index funds, you guys, and you don't pay any fees. It's like, take a little bit of the control yourself, and it's not that difficult. But it's as far as the crypto goes, and I've just done a massive fire hydrant hose bit of education on myself in terms of crypto and blockchain and everything over the last couple of months. And the experts that I'm listening to and what they're saying that the kids today, they're not going to know a world without crypto, without blockchain. And I'm looking forward to finding out more about blockchain, especially because I don't quite understand yet why everybody is saying that it's going to change other industries too, other like the art industry and insurance companies and all these different types of companies that, and I'm sure it's going to boil down to the transparency and the fact that there's no way for people to manipulate the price of things behind the scenes because it will all be in the open. But I want to better understand that. So I'll be digging more into it. Once I do, I'll be sure to do a special report on that so that you can hear that too. but they're not going anywhere. And in fact, I mean, the predictions for Bitcoin are astronomical. I don't even want to say what I've heard recently because it's just so ridiculous and high. And it's like, it's hard to believe. But what I do believe is, what I do know is today, there are, I think about 1,000 coins in cryptocurrency coins created and circulating. There may well be more, but there's about 1,000 that are like, you know, worth paying attention to or doing well. And you've got coins that are pegged to currencies, fiat currencies, right? So you'll have a US dollar coin or a euro coin, euro based coin, a Japanese yen based coin. And what's good about those is those are sort of like the stable coins, right? Because they don't actually fluctuate that much compared to the other ones that are out there. And I mean, you can kind of relate that to the stock market, and the great big blue chip companies tend to not really fluctuate in their share price that much compared to like a new startup. Like, you know, it really is kind of a similar thing. So the thing with crypto is, if you're going to invest in it, wow, it definitely is on the surface, the way that the majority of us invest in the markets, crypto would be super high risk. There's no doubt about it. If you are a person who looks at finding the way, thinking that you can be a predictor and know when you can get in when it's low and when you can sell when it's high and find those and do that, then great. It's just that most of us can't do that. And in reality, buying low and selling high, I mean, it's a no-brainer, but it's also basically gambling, isn't it? How do you know when it's low and how do you know when it's high? How do you know when you get in after that big plunge that it's not going to keep on going down? And how many times has that happened? It's happened to me when I'm, oh, this is the opportunity I've been waiting for, and you jump on it, and the next thing you know, it keeps going down, and you're thinking, oh no. Well, we don't want to take stupid chances, especially if you're like me and my husband. We're not spring chickens anymore. We're not having, 20, 30 years ahead of us of time to make up for mistakes, financial mistakes that you might make, risks that you take that didn't pan out. I mean, those days, wow, we're not wanting to do that anymore. And maybe you're in a similar situation. And if that's the case, I don't recommend trying to time the market, is what that's called, trying to buy low and sell high. Even as appealing or as it might seem, because right now, as I'm recording this, crypto, well, or Bitcoin specifically, which is kind of like the granddaddy, the big king of the coins at this point. It's like the first one. It is the first one, and it climbs to a high of just slightly over $60,000 per coin recently. And then Elon Musk, from what I understood, he started talking about, Tesla not gonna accept them or something, and the market went down, and it lost, like, I mean, it went down to just under 30 to, like, so that's like half of the value, right? Like really, really quickly. And I expect that those types of huge jumps are going to continue. So imagine if you put a chunk in and then it tanked and went down. Wow, you're going to have to wait and try and ride that back up again. And who knows how long that is. And that's not really it's not an investment strategy, sound investment strategy. That's a Vegas gamble, right? And if you've got a little bit of money and you want to do that, go for it, right? As long as you're fine, it's not going to affect your quality of life if you don't get that money back out. Because I'm looking more at an investment that is liquid, that has better than average returns, that is not a huge risk. I understand and I know that any investment in the world has risk. We can all lose our money on anything we do, no matter what, even if the bank says they're guaranteeing it, because look at all the number of banks whose doors shut when that last crisis hit, and the people who had investments there, they did not get all their money back. That is for sure. So there, even when you're given these guarantees that you think you can count on, we're still at the end, it's still buyer beware. And you've got to do your own research and make your own gut feeling, your own gut check, and decide what is going to be the right path for you. So in just throwing some money in the market at crypto, not only is it kind of a dangerous strategy for the buy high or buy low, sell high idea, because it's super volatile, but also the way that you actually get in and buy crypto can make that a little bit dicey as well, because of the fact that it is this decentralized market. You've got a lot of potential traps out there. There's a lot of potential scammers. There's a lot of people wanting to step in and just, say, yeah, I can get you into crypto. Come on, invest over here with me. And one in particular I've heard people talk about is Robinhood. I've not done research on them personally, but I know and completely trust the people that I've listened to who've talked about it. And from what I understand, when you invest in them, you don't actually even own the crypto. You don't even own the investment yourself. You're basically handing your money over into an investment pool. And they've put their own restrictions on it. So they've got their little centralized thing happening in the way that they're deciding to invest in this particular market and in crypto as a whole. And you're now subject to their rules for how much you can take out, when you can take it out. It doesn't, you don't even ever own it. And that's something I definitely don't recommend. Don't hand your money over to people, you guys, that are just going to manage it for you for fees. And especially if you're going to have these situations where you're not even able to liquidate, or you're going to have penalties and all that kind of thing, because there are relatively low time requirement options that are out there for you. And I say low time requirement because, believe me, I understand what a big thing it can be to take on your finances yourself and try to invest and manage your money, because we're all busy. We've all got a life. And for a lot of us, this might not even be the most interesting, sexy subject anyway, right? That you really want to spend time figuring out, but it's so important. And it could mean a massive impact on your life and quality of life down the road. So if you can do little things, like, for example, the index fund that I just happened to mention a little while ago, there are no fees on an index mutual fund. You can just invest yourself and on behalf of yourself and do it. Because believe me, those mutual fund fees that are hidden away down there, they're brutal. The mutual fund companies are the only ones that are making money every single year, and it is hand over fist, believe me. So anyway, yeah, if you're going to look at doing something in crypto, educate yourself a little bit first, and really be leery of any situation where you have to invest the money. Maybe it's not even going to be in your name. You don't actually own the investment that you're putting your money into. And there's got really strict restrictions and rules on how and when you can remove the money and take it out. And some of this sounds a little bit like a government bond, doesn't it? Yeah, so it's kind of interesting, the comparison there. But a little bit later on in a few more weeks, I'm going to share with you some more information about what I consider to be the lowest risk way to possibly to invest in crypto right now that I'm aware of, and I'm doing it. And what I decided is that, because I'm kind of at ground zero here myself, like I say, up until a couple of months ago, I didn't know. I had my head in the sand about crypto. Literally, I was just like, don't even talk to me about it. I'm not interested. I missed the boat before when it was low, and now it's like over. As soon as it hit over 5,000 a coin, I thought, I'm not paying that now. That's what I thought. I just never bothered taking the time to look into it and figure out and learn until recently. So I know there's a whole bunch of you out there in exactly the same situation. So I decided that I'm going to document my entire journey. And this is ground zero, this video here. This is the first one that I feel is super important, because this is information that I would want to know if I want to actually look at investing in crypto. Because until you believe and feel that it's going to be around for the long haul, it's going to be around for the rest of your life, 100%. And until you believe that, you might not actually want to get involved in it and do anything with it, right? That's where I was at anyway. So yeah, you look forward to more to come in the coming weeks. And I'm going to open up my account and show you my actual screen and what's happening with my real money investing, as well as the demo bots that are happening beforehand, before the fiat currency gets in there. So this is going to be really exciting, and I'm really looking forward to sharing with you guys. And yeah, in the meantime, if you have any questions at all about it, or want more information, like just hit me up and let me know, because I'm happy to jump on a call or do another video if there's something specific you want to know. And I can do shorter ones too. Don't be shy, because I have deep roots in this industry right now with a couple of key players in a certain segment of the market. If that sounds kind of I don't know, behind the curtain and like it's a secret, it's not a secret at all. I just want to drip feed this out and not you know, not try and do the fire hydrant of information on you. Let's put it that way. So yeah, you know, my email is heather@legitebiz.com, and you can reach me there anytime. And there's multiple places on this blog in the channels there that you can reach out as well. So until next time, I will wish you a great day and much success in all of your endeavors. Thanks, everybody. See you next time.